Good morning. A second here. So, box rebounding a little bit. Let's try to look at the bonds here because they certainly look like they're going to go higher. Excuse me. And interest rates are down, but basically it's some crazy price action after Friday, which was understandable. The question is whether it would go lower. And in typical fashion, over the weekend, the president and the vice president kind of backpedaled a little on their statements, and the markets went up. So the one thing that happened that I think was a bit different than the other times, I mean, I think as I looked around, I don't think there was a country that was spared this fiasco. Um, if you look at the country ETFs, all of them had gigantic wide range bars to the downside. And so the transports collapsed. That was one of, something that I wrote about in the weekend letter, about this universal move to the downside and the transports going down, and of course the Russell and so on. And the implications were, a global recession. Copper, everything collapsed. And so now, we deal with this craziness, which has been the case with most of the comments the president makes as to different changes. We all remember Liberation Day, but yeah, if interest bonds keep going up and interest rates going down, that would be another vote for the thought of a recession. But who knows? With these politicians that they, back off. And I was reading in the Wall Street Journal this morning, I think it's Trump saying that Trump or Vance was saying that President Xi being reasonable. I mean, I don't know. I mean, maybe they know better than me, of course, but how do they know what he's going to take from all of this? But anyway, we just have to see how this unfolds technically. Um, Breadth got to an extreme. Sentiment isn't even close. So I think more of the same as to the internals. They're not helping us here. Coming down to a minus 200 area, often a bounce, but with a wide range bar breaking to the downside, like the one seen, monstrous one. And after the close, prices did go lower. And let's see, yeah, you can see my cursor down there on the spiders. They went down there below the 50 MA. And so those comments over the weekend, things gap up a little bit, and you can see where they are. I mean, that's a big gap from that wide range bar. So we do not have the kind of situation where, it stays down there in the lower third. I mean, we're going to see where it goes. It's stabilizing at the moment. It's rattling around. And, suspect the volatility is going to take some time to subdue itself. And if you're going to be trading spiders, leverage spiders, futures, just be aware that the ranges are likely to be extremely wide. And you have to make adjustments for that in your money management. So we'll see where this goes. I'm just looking over to the left there. And while I'm crossing beyond what's directly to the left over to this minor resistance, I got to take a look at that in a situation like this. And it's the idea of a wide range bar, which we talked about several days last week. And in retrospect, these do not look like wide range bars. What we were really focused on last week were these 65-minute down bars that created the voids in what I referred to as the weakest link. And, another one here, and then it rallied back up again. And my comments at the time was that's the kind of price action that we see in a bull market. And I think as we came into Friday, part of my comments were, how long can this last? And of course, not knowing what was to come, which was a huge surprise. I think to the whole world, it was a surprise because things were shaping up if you're looking at a 5-minute chart, they were ready to rally again, and then the news came and prices collapsed as they did very, very quickly. So, and where do we go from here? I think it's a wait and see as to, can it continue? Does it continue to rally back up toward this resistance, which would be a tremendous um, reversal and retracement into a wide range bar like that? But this is not only the power of the wide range bar, but the idea of it being the weakest link because there's nothing to trade against. Well, look, we all trade off of basic things, support and resistance. What we choose to put on the chart, whether it's a moving average or some retracement level or whatever it might be, is subjective. So, those kind of things, I imagine, I'm just eyeballing this from here to here. This looks like it's about 50%, and it's lined up with that minor resistance area. So prices are stalled. So that's the kind of thing you want to look at. And we'll just see on the smaller time frames, 5-minute, maybe even 2-minute, what the price action is. You see overnight, it was just back and forth, and some kind of whipsaw going on there. And so it's just stabilizing. I think everybody's a little shocked as to what occurred. And the best thing to do is to get a little data, before taking any action. So, down here, the advancers minus decliners, I mean, down there to minus 2,000, that's what you would expect on a bar like that. So what's the value? Well, sometimes you get big down bars and it's nowhere near that kind of a number. But usually while that's overcooked and you get a bounce, it usually implies that there's more to come. The Qs, similarly, the big bounce, getting closer to this higher minor resistance area. But Dan's typing some stuff there. Yeah, so in the video was having a pretty big bounce, which you can see. But, measurable as to, what we're seeing there. I mean, that looks like it's more than 50%. It's going to be wild until things settle down. If we look around IWM, similar price action, large gap up. We're just going to see how this shakes out this morning as to which way this is going to go. Again, we'll look at the smaller time frames and see if they either break out or break down. There's got to be a lot of uncertainty, of course, as to what's going to happen, what the next news item might be that could move the markets. And as the government open, the ridiculous things that are going on over there. But, we have to deal with it. Volatility index, that spiked huge. It's stalled near the prior high areas, and you can look at the weekly chart. Those prior areas where it went up to and came down from. And so that's moving down quite a bit. So more of the same. When we go through all of these sectors and looking at internals, we're looking for differences that might support a bias one way or another. But as I looked around, everything is, for the most part, the same. Big moves, big retracements. Bitcoin is not retracing. So there was no place to hide on Friday. Everything went down. And this now is forming, as you can see on the weekly chart, just a really big trading range. So a lot of uncertainty, and just let things calm down. Let them tighten up. And you can go to smaller time frames, and trade from them where you'll see things tighten up faster or not. But that's what we'll be looking for. Gold is up again, and silver is up. You can see silver is up almost 6% here, but gold is pushing up to another new all-time high. Silver is pushing higher, even a bigger bar. pushing up there. Oil is up. Not so. This is when I'm talking about a wide range bar down and staying in the bottom part. This is your typical setting up the 1, 2, 3. As markets around the world went down, interest rates down, oil down, copper down, and now these bounces. Today will be a day to see how far they go, what news comes out, and where we go from here. Futures going to be the same as the others. You can see the bounce there. After the market, that pushed down below the 50 MA, and now it's coming back up as it hits this support. Almost a 50% move on the Russell into the wide range bar, and it's rattling around here. So we'll see if it breaks overnight lows or whether it can take out these highs. Going to be a wait and see. Yeah. So more back and forth as I look at this. It looks like the beginnings of maybe a head and shoulders top, left shoulder, head, could be right shoulder, going back up. So we need patterns. Right? We're price pattern traders. We need patterns to trade off of. So however we dissect this, however I dissect it, I need more information to decide which way things might go here, at least in the short term, and whether, the energy, the fear, the uncertainty created by this wide range bar, how it dissipates. And I suspect that could take a few days unless, Mr. Trump comes out and says, hey, I spoke to President Xi. Everything's okay. And we'd be back up to new all-time highs. Yeah, SPX numbers, which may have changed from when I put it here. Hold on a second. And this is an options expiration week, if I'm not mistaken, which could have something to do with things jerking around here today or getting pinned somewhere or the other. So we see where this is gapping above 660. This cluster of bars right there. And you can see where this is. I mean, this is like ridiculous, but this is what happens when you get such big moves. The premiums go crazy. You can see the numbers there, but let me just double check this. Things are just rattling around, but 67.10. Yeah, see, as it rattles around, they're gonna move a lot, man. You better have your Pampers on. Or a strong stomach. I mean, those doing put spreads on Friday, hopefully you had contingent orders in, and they triggered, and the slippage must have been horrendous at 64.90. All right, so they've come in, gotten tighter as the prices have stabilized, and they're gapping up around here, basically in the middle. So let's see where they go at the open and in the green room. We'll be looking to trade. Spiders, Qs, Russell, YM. The futures and/or the leveraged ETFs at the appropriate time when things settle down. What else to look at? I mean, everything's the same. No matter where you look, things were crushed. This is a significant gap up into this minor resistance area. So do not get enamored by the gap up and thinking we're going back up to the high without evidence on whatever intraday time frame you're looking at to support that bias. There's a lot of damage was done. And yeah. I mean, even the regional banks, I was thinking this was going to bottom out. We're going to have these catch-up trades. No. So we'll see how things settle down and they shake out today, and then we go from there. I said, there's a lot of damage done. I mean, even retailers. It's just different measurements of how bad it was, and in the next couple of days, we'll see how much it dissipates. All yours, Dan.
Morning. Hey, happy Columbus Day. Bond market closed, banks closed, the stock market open. But I remember in the 90s, it was a stock market holiday. I don't know what happened. Maybe they took it away and gave it to Juneteenth or something like that. So Friday, we actually shorted right into the close. We shorted the 620 puts for Friday. So we're going to, I bet we're going to have at least 50% of max profit at the open is my guess. If not, even 70 or 80. And the market, it actually on China news fell another $5 before they stopped trading for the weekend. And then remember Friday, remember Greg, we were having this talk. And I said, okay, news comes out. We're going to play nice. And do you remember what my guess was? I said, I still only think we're going to gap 50% into the bar. And that's exactly what's going on here today. So as Greg said, it's going to make it harder. We had longs and shorts in the weekend letter, of course. But the shorts, I got no problem at all if they trigger. In fact, it's better. Anything not gapping up with this big old gap is relative weakness. So actually just glancing at the Dow 30, there's 3, 4, 5, 6, 7 stocks that are red, 7 out of 30. 2 of them in healthcare, J&J Merck. So let's go through what alarms went off. So that spider, I moved the stop, and I'll monitor how much gain we have at the open. The CBLV, we gave kind of a pseudo 1, 2, 3, 4. It's gapping over the entry. So let me tell them, wait for pullback. Silver, Greg mentioned, we have this in the ETF letter. Look at that 15-minute chart. This GDX, there's a number of gold miner stocks that I'm watching as shorts. This was a 1, 2, 3 in an uptrend, but climb a weekly, monthly, and now it's a bullish gap. All righty. All right, let me get Thomas here real quick. Upload. Yeah, these power things and raw material stocks continue to be strong. It's just I'm going to be very selective on new longs here today. Yeah, I was just about to look at MP because my alarm went off. We have this. So when we were looking at material stocks on Friday, this was the only one not extended. And we talked about it being a possible catch-up trade, and then I didn't have an alarm and it ripped. So we did do a put spread on it. And here I had moved the stop. If you didn't see it. But this one possible 30-minute high could be a directional because it's not extended. Nice gap on the 15. Yeah, typo. Okay. Um, where? Just because I don't have time. 69.65. Oh yeah, yeah. Yeah, I actually fixed it on the spreadsheet, but I didn't fix it here. So thanks. Other alarms. BCE was a beautiful W bottom relative strength. Greg found that on Friday. We bought the stock and did a put spread. I had an up alarm go off, but I don't. It's showing. It's showing that it's up here in my minder, but showing it's up $1.55, but I don't see it in the prints or the level one. So I'll just wait for the open. And that's XME materials as a climb home, but man, crazy runs. Look at this gap breakout right there. Was the entry. Um, I'm shocked I don't have more alarms going off. That's it. So let's just go to my interest list here. Scholar Rock is getting whacked. No pattern. So I mentioned this thing, Abco had news. This AI thing is just totally reminding me of the internet days, the late 90s, 2000s, when companies would just say, oh, I'm opening a website on the internet and their stocks rip. It's like now, every time somebody says AI, they rip AI, uh, energy stocks, and now these materials, critical materials that Trump's taking investments in. I'm assuming that's the news on BE. Look at that, rip up to 108. Bloom Energy. I'm just assuming because that's the times that we're in right now. Energy. So Alex mentioned this one, recent IPO, Fermi, and said it's energy also. There's not a lot of data, but that's a nice closing breakout of this buy setup. I click up and down for some reason, but the puts are massive for this Friday. Massive. We'll just let it play out. Let the alarm go. Rig T. Well, so I've done. So the majority of things are gapping up. I actually have this as a call spread under Friday, so I like the fact that it's up on any short trade. I like that it's gapping up because then that's just an added benefit of confidence if it triggers. So we talked about UAMY. Look at this. This possible done. This is a gap and crap. I prefer gapping up, 15 or 16, but look at this friggin' climb over the top and tail. US Antimony Corp. Antimony, I can't even pronounce it. Intel got a downgrade. That's a call spread idea. Just not much premium, but a 30-minute low, maybe day trade. The media hasn't talked about it a whole lot, but I've been reading about it in the journal about these two big auto parts supplier companies going bankrupt, and Morgan was taking some losses on that, and there was something in the journal that Jeffries is taking some losses because of it also with Morgan. With I don't know, I don't care, but it's a climb up. So Estee Lauder got an upgrade, but no pattern. Fast had earnings. 43 and change. No pattern, but we'll come back to it. Yeah, on Bitcoin, there was a journal article that said there was a lot of forced liquidations over the weekend with the Bitcoin collapse on Friday. So I bid here down. Oh, no pattern. T-Tech. Sam gave me short idea, sell setup, frog breakdown, animal sector. I would love a 1, 2, 3 on this. Set an alarm 4610. EHC breakdown, and I like that it's gapping up. So that's a big old topping pattern. So I'll set an alarm 122.50 now. We had fairly light inventory. We had some beautiful shorts last week that we just took our money into weakness, like this VNT, MGM, and we had some nice shorts. And just as the market was tanking, closing at the low, we just took the money. FTS would be a great 1, 2, 3 if it sets up. You got resistance here, but if we get a 1, 2, 3, it should go through that. Lower, that's Alex list, but he's still got junk there to the left. I'll let you watch it. Airbnb, we're short and have a call spread. Management mode, NP, we talked about. BCE. All right, now, okay, see, so that gap was bad. Set a new alarm. 24. $23.50. Like I said, we have a directional and put spread on this. CXM, I like under Friday's low. Opal, that's headache pattern. LDI. Now it's not that opening, it's only up 3 cents. But if this were to take out, yes, it's Friday's topping tail, then you got a void, you got topping tail ignored, and you got a buy sell. GTX looks lower. BLD, I found this in the housing. I scanned the housing sector, and this, and most of the things in there look bad, and this thing looked good. Look at it gapping up here. So this could be a 30-minute high. Watch. EVLV. Yeah, you're right. The trigger was 820. You're right. Okay. Car closing breakdown. That would have been a perfect entry on Friday under Thursday's low. But that looks lower. OC is steady selling, but I'm going to watch it for a Climo. Look at the pickup in volume. WMS, big old topping pattern. FND, a Climo, but it's still relentless selling. A builder under Friday's low. I was going to give a call spread, but the 135s were illiquid, but you can get like a $1.20 or so in the 130s. So I like that. All right, JEF. Wow, nice gap. There's a 30-minute high trade now. All right, I don't need VE over here. we used to call this pattern a bear gap surprise. I mean a bull gap surprise. So yeah, that looks good, but 30-minute high. I'm not rushing into anything here. Yeah, Dow alarm. We only have a third left. Let's move stop 30-minute. I'm sorry, 5-minute high. That might have been an early alarm. So actually, we got 2/3 left. Like this 5-minute high is fine. I don't want to get stopped out. Have to open. Like Papa. Hello. Oh, nice, Mike Papa. Let's see where our spiders are. I'll make it puts. Um, remember I guessed 50 to 80% max gain. We are at so that was a pretty good guess. I was right. I was right smack in the middle. We're at 67% of max gain. That was a pretty darn good guess when I said 50 to 80. All right, let's check like up